Welcome to the Deep Dive. Today, we're diving into the American banking system. It's a must-know, especially for anyone living in the U.S. We'll break down how it works, its history, and all those agencies and regulations. And for all you English language learners out there, don't worry, we'll be highlighting key vocabulary and phrases along the way. So you can feel comfortable navigating the financial world here in the U.S.
It's fascinating. The U.S. banking system, it's this intricate web of regulations at both the federal and state levels. That's one reason why we have a surprising number of banks, over 4,500.
A 4,500 bank.
Yeah, it's something even many Americans find surprising.
Wow, that's a lot to keep track of. But I guess it makes sense when you think about it. The long history of banking in the U.S. has been pretty dramatic, right? I mean, we're talking funding revolutions, economic panics, even the Great Depression.
Oh, absolutely. Banking in the U.S., it's a story of constant evolution, adaptation. To really understand the system as it is today, we need to go back to its roots.
Okay, so let's rewind the clock. Where does this story begin?
Well, our journey, it starts in 1780, right in the middle of the American Revolutionary War. The Bank of Pennsylvania was established, and it played a crucial role in funding the fight for independence. Just imagine, at that time, the nation, it didn't even have a unified currency. They relied heavily on bartering, and informal transactions.
So the Bank of Pennsylvania, they really stepped up to help finance the revolution.
They did.
Wow. It just goes to show how banking and nation building were intertwined from the very beginning.
Oh, absolutely. And then shortly after that, in 1782, the Bank of North America was founded. It was the first commercial bank in the U.S., specifically designed to handle, those more complex financial transactions.
So things were getting more sophisticated. Was this around the time Alexander Hamilton came into the picture, the first Secretary of the Treasury?
You're right on track. Hamilton, always the visionary, he established the Bank of the United States in 1791. His goals were ambitious: to manage government funds efficiently, pay off those war debts, and importantly, create a stable national currency.
Hamilton, the architect of the early American financial system. But wait, wasn't there some drama later on with President Andrew Jackson?
Oh, absolutely. Jackson, he deeply distrusted centralized banking. He saw it as favoring the wealthy elite. And in 1832, he vetoed the renewal of the Bank of the United States charter. This decision, it had a sort of a ripple effect throughout the economy, and eventually it led to the Panic of 1837.
Wait, what exactly happened during the Panic of 1837?
Imagine a financial earthquake. Without a central bank to regulate the currency, state banks, they started issuing their own banknotes. This led to massive confusion, instability, and ultimately, widespread bank failures. People lost their savings, businesses collapsed. It was economic chaos.
Wow. It's a stark reminder of why regulation is so crucial. So, did the U.S., did it eventually return to a more centralized banking system?
It did, but the path, it wasn't straightforward. In the 1860s, we saw the rise of investment banking. Firms like Jay Cooke and Company taking center stage in financing the Civil War. Then in 1863, the National Bank Act was passed. This aimed to establish, a uniform national currency and create a system of federally chartered banks.
So another attempt to create a national framework. Did it work this time?
It was a significant step, but U.S. banking history, it's rarely smooth sailing. The system continued to evolve, facing various challenges, including economic downturns and banking panics. Fast forward to 1913, that was a pivotal year. The Federal Reserve System, or the Fed as we know it today, was finally created.
The Fed, that's the one we always hear about in the news. So what's their main function?
The Federal Reserve, it's the central bank of the United States. Think of it as the conductor of the orchestra, responsible for conducting monetary policy. This means controlling the money supply and interest rates to influence things like inflation and economic growth.
Okay, starting to see the bigger picture here. But we've all heard those stories, right? About bank failures and people losing their savings. What safeguards are in place to prevent that kind of disaster?
That's where the FDIC comes in, the Federal Deposit Insurance Corporation. It was created in 1933, right in the middle of the Great Depression. Its purpose was to restore public trust in the banking system, and it's been incredibly effective.
Effective how? I mean, what does the FDIC do?
Imagine a safety net for your money. The FDIC insures deposits in member banks up to $250,000 per depositor per bank. This means that even if a bank fails, your money is protected up to that amount. And here's the remarkable part. Since the FDIC's creation, no depositor has ever lost insured funds due to a bank failure.
That's a relief. It makes you feel like your money is actually secure.
Yeah.
What about those other agencies, though, like the OCC? They play a role too, right?
Absolutely. The OCC, or the Office of the Comptroller of the Currency, is responsible for chartering, regulating, and supervising all national banks. They also oversee the U.S. branches of foreign banks.
So they're kind of like the watchdogs, making sure everyone's playing by the rules.
Precisely. And then you have the Office of Thrift Supervision. They used to oversee savings and loan associations, but in 2011, it was merged with the OCC.
Okay. So there's this whole network of agencies working to keep the banking system running smoothly. But for our English language learners, it's probably time we pause and unpack some of those banking terms we've been using.
Yeah. That's a great idea. Let's make sure everyone's on the same page vocabulary-wise.
All right. Let's start with charter. What does that even mean in banking?
Imagine a charter as a kind of a legal document, like a permission slip from either the federal or state government that gives a bank the right to operate.
So you can't just, like, open a bank in your basement.
Not quite. You need that official charter to get things rolling. And that brings us to the difference between national and state banks.
Right. We've mentioned those terms before. Can you break it down for our listeners?
Sure. So a national bank, as the name suggests, it's chartered by the federal government, specifically by the OCC. They operate under federal regulations, and they can do business in any state. State banks, on the other hand, they're chartered by individual state governments. They mainly operate within that specific state.
So it all comes down to who gives them the thumbs up to operate.
Exactly. And then you have state non-member banks. Those are like state banks, but they're not part of the Federal Reserve System.
Okay. State regulated, but not part of that central banking network. Got it. What about those savings associations we hear about?
Federal and state savings associations are an interesting bunch. Originally, they were focused mainly on mortgages, but they've evolved over time. Now they offer a wider range of banking services, just like your typical commercial banks.
So they've branched out.
They have. It really reflects how the financial landscape is constantly shifting. And speaking of shifting, let's talk about those bank mergers and closures you mentioned earlier.
Yes. Why do banks merge in the first place? And what happens when a bank shuts down?
Well, mergers often happen for strategic reasons. Think of it like a business marriage. Banks might want to streamline their operations, or boost their brand by acquiring a competitor's name, maybe expand into new markets. But sometimes mergers are more like forced unions, pushed by regulators when a bank is, when it's on shaky financial ground.
Interesting analogy. So it's not always a happily ever after scenario. What about closures? What happens to people's money when a bank closes its doors?
This is where the FDIC's role becomes crucial. When a bank is in danger of failing, the FDIC, they step in. They can either take over the bank directly or find another bank to acquire it. Either way, the goal is to protect depositors. Make sure they have access to their insured funds.
So even in a closure, my money's still safe, thanks to the FDIC.
As long as it's within that FDIC insurance limit of $250,000, you're good.
Phew, that's a weight off my shoulders. But what about privacy? In this digital age, how does the U.S. system protect my personal banking information?
Banking privacy in the U.S., it's unique. It's not governed by one single law. Instead, there are regulations that apply to different parts of the financial industry. One key piece of legislation is the Gramm-Leach-Bliley Act, or GLB for short.
Okay, GLB. Got it. What does it do exactly?
Think of it as the privacy bodyguard for your financial information. It sets rules for how financial institutions can collect, use, and disclose your non-public personal information. For instance, they need your consent to share your data with outside parties.
So they can't just sell my info to the highest bidder?
Nope. And the Federal Trade Commission, the FTC, they're the main enforcer of these privacy rules. If a bank breaks these rules, they face some hefty fines.
So there are consequences for messing with my data. Good to know. You mentioned earlier that banking privacy violations in the U.S. are usually civil offenses, not criminal ones. What's the difference?
That's a great question, and it highlights a key distinction in legal systems. A civil offense is usually, a dispute between individuals or organizations, while a criminal offense, it harms society as a whole. In many European countries, violating banking privacy is a serious crime. But in the U.S., it's more often treated as a matter for civil lawsuits.
It's more about lawsuits and fines than jail time.
Exactly. There are some exceptions, of course, but that's the general rule.
Okay, that clarifies things. Now, before we move on, let's do a quick vocabulary recap just to help our English learners solidify their understanding.
Excellent idea. Repetition is key to mastering new vocabulary.
We've already covered charter, national bank, and state bank. Let's add a few more to the mix. How about regulatory agency?
A regulatory agency, think of it as a government body. They set and enforce the rules for a particular industry. In banking, we have agencies like the Federal Reserve, the FDIC, and the OCC. They're all working to keep the financial system stable and safe.
So they're the rule makers and referees making sure everyone plays fair.
Exactly. And remember, those agencies, they're there to protect you, the consumer.
Speaking of protection, let's revisit deposit insurance. We're talking about the FDIC's role, but what is deposit insurance exactly?
Think of it as a guarantee that the money you keep in a bank account is, well, it's protected, even if the bank goes belly up.
Right.
The FDIC provides this insurance, but it's only up to a certain amount, currently $250,000.
So it's like a safety net for your savings.
That's a great way to put it. Now, here's one that often makes people's eyes glaze over: monetary policy.
We touched on it briefly, but can you break it down, in simple terms?
Imagine the economy as a car and the Federal Reserve is the driver. Monetary policy is like the driver using the gas and brake pedals, to control the speed and make sure the car runs smoothly. They adjust interest rates and the amount of money circulating to influence things like inflation and economic growth.
Okay, I can picture that. The Fed at the wheel, keeping the economy on track. But how about usury laws? What are those all about?
Usury laws, they're designed to protect borrowers from those loan sharks charging outrageous interest rates. They set limits on how much interest lenders can charge, preventing what we call predatory lending.
Predatory lending, that sounds scary. What does that mean exactly?
It's when lenders take advantage of people who might be, in a tough financial spot. They might offer loans with sky-high interest rates or hidden fees, trapping borrowers in a cycle of debt they can't escape.
So usury laws are there to prevent that kind of exploitation. Good to know. We already talked about mergers and closures, but how would you define those terms?
A merger is, well, it's like a business marriage. Two or more companies, they join forces to create one bigger company. And a closure is when a business, in this case a bank, permanently shuts down.
So mergers are about joining forces, closures are about saying goodbye.
Exactly. And remember, we talked about how the FDIC steps in during bank closures, to protect those deposits.
Right. So even in a closure, there's a system in place to safeguard your funds.
Yeah.
And lastly, let's talk about privacy in the context of banking.
In this context, privacy is about protecting your personal financial information. Banks, they're obligated to keep your data confidential and secure, only sharing it with others in very specific situations, like when you give your consent or when required by law.
So it's about having control over who has access to my banking details.
Precisely. And as we discussed, there are laws and regulations in place to protect that privacy.
Great. I think we've covered a lot of ground already, and our English language learners should feel a bit more comfortable with these banking terms.
Absolutely. Remember, repetition and practice are, well, they're your best friends when it comes to mastering new vocabulary.
Couldn't agree more. Now, before we wrap up part one of this deep dive, I want to share a few extra tips, specifically for our English language learners who are working on improving their American English.
I'm all ears. Let's empower our listeners with some practical tools.
All right. So first up, watching American TV shows and movies with English subtitles is a fantastic way to learn. It's fun, immersive, and you pick up new words and phrases naturally. Plus, you get a feel for the rhythm and flow of American English.
I agree with that. It also exposes you to different accents and dialects, which is really helpful.
Absolutely. And of course, listening to English podcasts, like this one, can help you improve your listening comprehension and vocabulary.
You're too modest.
Yeah.
This podcast is a fantastic resource for anyone learning American English. The way you explain these complex topics so clearly it's truly commendable.
Well, thank you. I appreciate that. Another tip I highly recommend is practicing speaking with native English speakers whenever possible.
Yeah, there's no substitute for real-life conversation. It helps build confidence and fluency. Don't be afraid to make mistakes. It's all part of the process.
Exactly. Everyone makes mistakes, even native speakers. And finally, don't underestimate the power of reading. Pick up English books and articles on topics that genuinely interest you.
Reading exposes you to a wider range of vocabulary and grammar, and it helps you understand how the language works.
And it can be, enjoyable. Finding a good book can be like discovering a whole new world.
Absolutely. I think we've covered a lot of ground in part one. We've journeyed through the history of U.S. banking, explored those alphabet soup agencies like the Fed and the FDIC, and clarified some key vocabulary for our English language learners.
Yeah, it's been a great overview so far. But we're not done yet. In part two, we'll delve deeper into the current trends and challenges facing the U.S. banking system.
We'll also be addressing some of the insightful questions you, our listeners, have submitted about banking in the U.S. So stay tuned for more insights and vocabulary building tips.
In the meantime, we'd love to hear your thoughts. What aspects of U.S. banking do you find most interesting or surprising? Share your comments on our YouTube channel. Let's keep the conversation going.
And don't forget to subscribe and hit that notification bell so you don't miss part two of our deep dives into American banking. We'll see you there. Welcome back to our deep dive into the American banking system. In part one, we explored the historical evolution of banking in the U.S., right? We also learned about those key regulatory agencies and even, decoded some essential banking vocabulary.
Yeah, we covered a lot of ground.
We did, but now it's time to kind of shift our focus to the current landscape of U.S. banking. You know what's happening right now.
Yeah, that's right. Today, we're going to explore the trends, the challenges that are shaping the industry right now.
Yeah.
And we've got a ton of great listener questions to answer, too. So let's dive right in.
Okay. One of the biggest questions we received was about the rise of online banking.
Makes sense.
Yeah.
These days, it seems like everything is happening online, from shopping to socializing to, paying your bills. Why should banking be any different?
Exactly. Online banking has just exploded in popularity in recent years.
It has.
And for good reason. It's convenient, it's accessible, 24/7, and often it comes with those lower fees compared to those traditional brick-and-mortar banks.
So is this the end of those physical bank branches? I mean, are we headed for a completely, digital banking experience?
That's a great question. While online banking is, undoubtedly on the rise, I don't think those physical branches are going extinct anytime soon.
Okay.
Many people, they still value that face-to-face interaction,
Yeah.
especially for more complex transactions or when they need personalized financial advice.
Yeah, that makes sense. So it's more of a hybrid model that's emerging.
Precisely, banks, they're adapting to this changing landscape. They're offering this mix of online and in-person services to cater to, a wide range of customer preferences.
That makes sense. Speaking of changing landscapes, another listener wrote in asking about the rise of fintech companies.
Oh, yeah.
So what exactly is fintech, and how is it, shaking things up?
Fintech, it's short for financial technology. It refers to companies that are leveraging technology to provide, those innovative financial services. Think mobile payment apps, peer-to-peer lending platforms, robo-advisors for investment management, and even cryptocurrency exchanges.
Okay, I'm starting to see why fintech is such a buzzword these days. They're popping up everywhere.
They are, and they're really challenging the traditional banking model in many ways. Fintech companies, they're often more agile, they're more customer-centric, and they're quicker to adopt those new technologies.
So are they a threat to traditional banks?
Well, they're definitely a competitive force that's pushing banks to innovate and adapt.
Mm-hmm.
Some banks are even partnering with fintech companies to offer new services or improve their existing ones.
So it's not necessarily a battle between old and new.
Not at all. It's more of a dynamic interplay between, tradition and innovation.
That's fascinating. This brings us to another hot topic, cybersecurity.
Yes.
With so much banking happening online, how can we be sure that our information is safe? From those hackers and data breaches.
That's a crucial concern. And banks and financial institutions, they're investing heavily in cybersecurity measures to protect customer data. They use encryption, multi-factor authentication, and other, sophisticated security protocols to safeguard against those cyber threats.
It sounds like a constant battle to stay ahead of the hackers.
It is. The cyber threat landscape is constantly evolving. So banks have to be, they have to be vigilant, constantly updating their defenses.
Okay, that's reassuring to know. Another listener question was about financial literacy. They were asking for advice on how to become, more financially savvy.
That's a fantastic question. Financial literacy is essential for everyone, regardless of, their income or background. It empowers you to make, those informed decisions about your money and achieve your financial goals.
So where do you even begin? I mean, it can all feel so overwhelming.
It can be, but don't worry, there are tons of resources available. Many banks and credit unions, they offer those free financial education workshops and online materials. There are also government agencies like the Consumer Financial Protection Bureau that provide, valuable information and guidance.
So it's about being proactive and seeking out those resources.
Exactly. And don't be afraid to ask questions. If you're working with a financial advisor, make sure you understand the products and services you know that they're recommending. Knowledge is power when it comes to your finances.
I love that knowledge is power. Okay, ready for another listener question. This one's about the Federal Reserve, specifically how it sets interest rates.
All right, let's break that down. Remember, the Fed's primary role is to manage monetary policy, and setting interest rates is one of their key tools. They meet regularly to assess the economy and decide whether to raise lower or keep interest rates steady.
So what factors do they consider when making those decisions?
Well, they look at a whole range of economic indicators, things like inflation, unemployment, and economic growth. If they want to stimulate the economy, they might lower interest rates, making it cheaper for businesses to borrow money and invest. But if they're worried about inflation, they might raise rates to slow down borrowing and spending.
Okay, I'm starting to see the ripple effects of those interest rate changes.
Yeah.
But how does this impact, me, the average person?
Interest rate changes, they can affect everything from the interest you earn on your savings accounts to the rates you pay on loans, mortgages, and credit cards.
So it's definitely worth paying attention to those Fed announcements.
It is. They can have a real impact on your personal finances.
All right, one last listener question before we wrap up part 2. This one's about the future of banking. They're curious about what trends and technologies, are on the horizon.
That's a question that has even the experts, gazing into their crystal balls.
Yeah.
But there are definitely some exciting developments to keep an eye on. One is the continued rise of artificial intelligence and machine learning in financial services.
So even more automation and personalization?
Exactly. AI-powered chatbots that can provide, instant customer support. And personalized financial advice and product recommendations are becoming increasingly sophisticated.
What about blockchain technology? We hear so much about that these days.
Blockchain it's a true game changer. It has the potential to revolutionize how we make payments, track assets, and manage data securely.
So it's not just about cryptocurrency.
No, not at all. The blockchain has far-reaching implications for the entire financial industry.
Wow, it sounds like the future of banking is full of possibilities.
It is.
But also some uncertainty.
That's the nature of innovation. It's all about, embracing change and adapting to those new realities.
Well said. I
Yeah.
think that's a great place to pause our exploration of the current and future trends in U.S. banking.
Indeed. We've covered a lot of ground in this part, but there's still more to come.
That's right. In part 3, we'll wrap up our deep dive into American banking with some final thoughts.
We will.
We'll also provide some actionable tips for English language learners who are navigating the world of American banking.
Stay tuned, and don't forget to share your thoughts and questions in the comments on our YouTube channel.
We'll see you in part 3.
Welcome back to the Deep Dive. We've covered a lot in this series, haven't we? From the earliest days of U.S. banking all the way to, well, the future of finance.
We have, and we've tackled some pretty complex vocabulary too, right?
Yeah.
All to help our English language learners feel more at ease with banking in America. Exactly. But before we wrap things up completely, I thought it would be helpful to offer some practical advice, specifically for English learners who are trying to improve their American English, when it comes to banking.
Absolutely. It's essential, isn't it? Understanding the language of banking. It's crucial for anyone who's living and managing their finances here in the U.S.
Right. So let's dive into some helpful tips and vocabulary boosters. The kind of stuff that'll make you sound like a financial pro in no time.
Sounds good. I think one common challenge that English learners often face is understanding banking jargon, all those specialized terms and phrases that, can sound like a completely different language.
It's true. Words like APR, overdraft, escrow, they can be confusing at first.
They really can. My top tip is to actively build your banking vocabulary. When you come across a term you don't understand, don't just skip over it. Look it up, write down the definition, and even try using it in a sentence.
It's like learning any new vocabulary, right? Repetition and practice.
Exactly. And don't hesitate to ask for clarification. If you're talking to a bank teller or someone in customer service, don't be shy about saying, can you explain that in simpler terms? Or Could you rephrase that?
It's always better to ask than to pretend you understand, right?
Yeah.
And maybe make a mistake that could cost you money.
Oh, absolutely. Another helpful tip is to familiarize yourself with those common banking forms, and documents.
I know those can be a little intimidating, can't they?
Yeah.
All that legal language and fine print, it can make your eyes glaze over.
It really can. But understanding them is, well, it's essential. Luckily, many banks, they offer those sample forms and explanations on their websites. You can also find, resources online that break down those complex banking documents into plain English.
So it's all about being proactive and seeking out that information.
Exactly. And remember, banks are their businesses, so they want you to understand their products and services. So, don't be afraid to reach out for help or clarification.
That's a great point. Yeah, I wanted to add a tip that's specifically for improving your spoken English in banking situations.
Okay, I'm listening.
Practice ordering your thoughts logically and concisely. Banking transactions, they often involve a lot of specific details, so being clear and organized in your communication is crucial.
Yeah, great advice. It can be helpful to jot down those key points or questions before you go to the bank or make that phone call. This will help you stay focused and avoid rambling.
Exactly. It's also a good idea to practice those common banking phrases out loud. Things like, I'd like to make a deposit, or could I get a statement for my checking account, or what's my current balance?
Yeah, rehearsing those phrases beforehand, it can really boost your confidence and fluency when you're in a real life, banking situation.
And remember, even if you make a grammatical error, the most important thing is to get your message across clearly. Don't let fear of making mistakes, stop you from speaking up.
I agree. Fluency comes with practice, and every mistake is, well, it's a learning opportunity.
So true. Okay, I think we've given our listeners some solid tools to navigate the world of American banking. But before we say goodbye, I wanted to leave you with one final thought.
Go for it.
The world of banking, it's constantly changing, isn't it? With new technologies and innovations popping up all the time. But one thing remains constant. The importance of financial literacy and making those informed decisions about your money.
Absolutely. Understanding how the banking system works, managing your money wisely, and planning for your financial future. These are essential skills for everyone.
And remember, learning about American banking, it's a fantastic way to expand your English vocabulary and improve your communication skills.
It is.
So keep exploring, keep learning.